Good afternoon and welcome to the FAIRWINDS Retirement Planning webinar for February 2020. My name is Jennifer Becker, VP of Business Development, and here today I have my colleague Brian Kent, VP Sales Manager with the Retirement Planning Department. And we are happy to host today's webinar, which is titled 7 Keys to Enhancing Your Social Security Benefits. This presentation will help you understand the basics of Social Security, including when to start taking benefits, working in retirement, Medicare, and finally, rethinking retirement strategies. Before I turn the presentation over to our guest speaker today, I would like to remind everyone that FAIRWINDS has financial advisors available to meet with you in branch locations near you or via the telephone or internet to meet and discuss your individual situation and retirement plan. Now today we have a special guest on the line all the way from Minnesota, Dave Vogel, Senior Advanced Market Consultant from Allianz Life Insurance Company. He currently works with financial professionals planning tax-efficient retirement, estate, and business planning strategies, and he holds this highly sought-after CFP, CLU, and CFHC designations. Thank you, Dave.
All right. Good afternoon, everyone. My name is Dave Vogel. I'm going to be your presenter today. The topic we're going to discuss is Social Security and the 7 keys to enhancing your benefits. And please note, FAIRWINDS Credit Union is not an employee of Allianz Life, and that this material is prepared by Allianz Life and its affiliate Allianz Life Carriers for Financial Professionals. So, Social Security provides options. Many believe it is cut and dried. It is a retirement income source with some control, but managing your Social Security benefit is part of your retirement income process. So today, we're going to give some basic, benefit options and talk about the income benefits, when to start benefits, what happens when you're working in retirement. We're going to cover the tax implications of taking Social Security. We're going to go over spousal and survivor benefits. And we're also going to touch briefly on Medicare. All right. So for many people, Social Security is the largest source of income. You can see here for all retirement households, Social Security provides about 38% of their income in retirement. We've also got some that have pensions or retirement funds from IRAs, others interest and dividends. There are those that work part or full-time while collecting Social Security, and then other income. Maybe they have a rental property. But you can see here, as people get older, that maybe some of those earlier non-qualified, savings vehicles, money market fund or savings at the bank, as those get used up, Social Security becomes a larger and larger part of their retirement budget. For those 75 and older, it's 45%. And Social Security is more than just retirement income. In 2019, 64 million Americans collected over $1 trillion in Social Security benefits. And the vast majority of that was for retired workers and their dependents. But also 15% of that paid out was for those that were disabled or their dependents, and 12% for survivor benefits. So for those workers who passed away, the survivor benefit to a spouse or minor children accounted for 12%. And the average retired worker, their benefit in 2019 was $1,413. And for those that were disabled and qualified to take disability payments, $1,198. Big question a lot of people have on Social Security: will it be there? And we see these reports get updated every year. Social Security at its current payout and the current amount it's collecting is expected to be depleted in 2034. That doesn't mean Social Security would end in 2034. It's just that current estimates with what's being taken in through the payroll taxes that it could be expected to pay out about 77% of scheduled benefits. So are we going to see changes? This always gets talked about. Nothing has been done. You know, the president and Congress, this just did come up recently again, that they are aware that changes need to be made. The sooner the changes are made, the less drastic the, changes will need to be. So hopefully they can get something done there, but it's expected to be some combination of higher payroll taxes, slight reduction in benefits or cost of living increases, or some, somewhere in between to get that in balance again. So how do you know what you get from Social Security? So this has gone through a couple changes over the last 10 years. It used to be every year you got a statement in the mail, it summarized your earnings history and gave you an estimate of what your retirement benefit would be at 62, full retirement age, and 70. It also let you know what your benefit would be if you became disabled. They stopped mailing those out a number of years ago and they wanted everyone to go online. If you go to ssa.gov, you can sign up there. People complained. They did start sending the statements out again. Their current rule is that for those that haven't signed up online, they will send you a statement every 5 years. So it's 30, 35, 40, 45, and so on, if you haven't signed up online. I did, in fact, sign up online just because I'm in the business. We talk about Social Security a lot. I wanted to see what people were seeing. And so I don't get my statement mailed to me, but every year about this time, they update it. Once they have your 2019 earnings history, they'll put it on there and they'll update the numbers for you. All right, so how do you qualify for benefits? So qualifying for Social Security is pretty straightforward. They say that you need to have 40 credits of work history. That equates to about 10 years of work. So you can earn up to 4 credits per year. So 10 years with 4 credits per year, 40 will make you eligible to receive a retirement benefit. And that credit earned, it does not have to be spread out over the year. So you can see in 2020, if you earn $5,640, you will get all 4 credits for that year. Now that can occur throughout the year, or let's just say you're a contractor. In January, you made $5,640. Boom, you're done. You've got your 4 credits for the year. One popular question we get is, how exactly do they calculate your Social Security benefit? So it's actually a lot more complicated than you'd think. But it's also rather straightforward if you want to talk about it in simplistic terms. Social Security will take your highest 35 years of earnings. So if you've worked 40 years, Social Security will look at all 40 years. They'll pick the 35 highest of those years. They do index everything for inflation. So I started my work as a lifeguard in the 1990s, made a few $1,000s in those years. Those are part of my earnings mix right now because I don't have 35 years of work history just yet. They take those 1990s numbers, they index them for inflation. So let's say they might be the equivalent of $5,000 or $6,000 today. They add up the highest 35 and you divide by the 35 years. That is the number that they are using to calculate your benefit. And yes, if you don't have 35 years, they are putting zeros in that calculation. So getting a full 35 years is the best way to maximize your benefit. So your full retirement age benefit amount, we're going to go over that a little bit later, but if you take it at full retirement age, you get 100%. If you take it early, you get a reduction of 25 to 30%. And if you wait to age 70, they will actually increase it by 8% per year. You can get 24 to 32% more. So, starting benefits. You can start to take your Social Security as early as age 62. And you can see here on the chart, we do have a sliding scale. This was part of legislation that was passed many decades ago in the 80s with Ronald Reagan. But they say that for those born before 1954, your benefit reduction at 62 is 25%. We are currently in those middle years where we are starting to extend people's full retirement age by 2 months for every year later they are born after 1954. And in not too distant future here, those born in 1960 or later, that full retirement age is going to be 67. So 30% reduction in benefits if you start at 62 for those that were born in 1960 or later. So, enhancing the benefits by delaying your start date. So, once you get the full retirement age, if you wait to start your benefit, they give you an 8% delayed retirement credit. And you don't have to wait all year to get 8%. It is earned monthly. So, if you were to work to 68 and a half, that extra half year would get you a 4% delayed retirement credit. And the question is, when do you start? You can see here, if someone started at 62, they would have 144,000 in earnings. Lifetime, they take out 504 by starting at 62. Whereas if they waited to 68, at age 70, they'd only have 55,000 in benefits. But you can see if they lived to age 90, they'd have 612. So they would have earned an additional approximately 108,000 more by waiting from 62 to 68 with that strategy. So again, if you need the money, you might have to take it. But for those that can afford to wait, using money from IRAs or other savings, to supplement your income, if you can wait longer, generally speaking, Social Security is going to pay you more if you live past your life expectancy. So for those that are expecting to live, generally speaking, beyond 83, your best election is to wait till age 70. For those of you that are wanting to partially retire, semi-retire, you want to collect your Social Security benefit, but you also want to work during that time. There is a reduction in benefits for those that are under their full retirement age. So for those working in 2020, if you make $18,240 or more, once you're over that threshold, they do reduce your benefit by $1 for every 2 over. So what does that mean? So let's say that you make $28,240. You're $10,000 over the threshold. They'll reduce your benefit by 1 for every 2 over. So there would actually be a $5,000 reduction in benefits. How does that work? So let's say your Social Security benefit is $1,000 per month and you have a $5,000 reduction. You would not get a check from Social Security for the first 5 months. Once the full reduction has been withheld, then you'll get your $1,000 per month for the remaining 7. For those that are working and turning full retirement age, so let's say you're turning 66 this year, that's your full retirement age number. They do allow for you to make up to $48,600 for those in that year. And the reduction is 1 for every 3 over. So they understand that people might still be working in the year that they're going to retire. They do have that higher threshold. And once you are full retirement age, there is no earnings reduction. So Social Security is essentially saying, once you've reached full retirement age, if you want to work part-time, full-time, whatever, we're not going to reduce your benefit. You've waited long enough, you can earn what you want and take your Social Security check. So let's take a look here. Hypothetical example, got a lady named Susan here, born in 1958. Her annual Social Security benefit is $17,652. She's getting 72.5% of her full retirement age benefits. Current year earnings, $40,000. Social Security earnings limit, again, $18,240. So she had $21,760 of excess earnings. We take half of that, $10,880, her net Social Security benefit for the entire year is only going to be $1,918. So what this is saying, what Social Security is trying to say, is that this is a retirement benefit for you. They do not want people making lots of money through earnings and drawing on a Social Security check. It's intended to make those that are substantially earning money to wait on taking their benefit. All right, so Social Security benefits. You may be surprised to find out that even though it was your money that they took out of your payroll deductions, when you eventually turn on your Social Security income, it is going to be potentially subject to tax. So if you are single or head of household, if you make under $25,000, you're not paying taxes on your Social Security. Once you've hit that 25, then we start looking at half of your Social Security being taxable. If you earn over $34,000 and are single, then 85% of your Social Security benefit is going to be going on your tax return as taxable income. Married filing jointly, the numbers are $32,000 and under, you're at zero. Between 32 and 44, half. And if you make over $44,000, 85% of your Social Security benefit is going to be subject to tax. All right, so let's say that you've worked your entire life, you're married, and you have a spouse that did not work for whatever reason. They were taking care of the kids or what have you. So if you have a spouse that did not qualify by getting their own 40 credits, if they've been married to you for at least 1 year or are the parent of a child that you have, they would be qualified to receive up to half of your benefit if they wait to full retirement age. So if you have a benefit at your full retirement age of $2,000 a month, your spouse, let's say, was a home, at home with the kids, what have you, they would get $1,000 a month. Now that's at full retirement age. If you were to file for benefits and let's say they filed at 62, they would get a reduced amount of half. Okay, and it's similar to that reduction that you'd have on your own benefit for retiring early. So how did they make that calculation? If both spouses qualify on their own records and they both go to file for benefits, generally they're going to get the higher of their own benefit or half of their spouses. So you need to let Social Security know if you have a spouse that you're married to and they have a much higher earnings record, let Social Security know that you could qualify under your spouse. They don't automatically do that for you. So if you go in, file for benefits, and let's say you've got your smaller benefit that you're taking, your higher earning spouse has not filed yet, you're not eligible to get that half yet. But let's say 2 years later, they do retire, they decide to take their benefit. Now you're eligible for that higher amount of half of theirs. You have to notify Social Security that you're eligible for it, and then they will make that change for you. So I'm going to talk briefly here about one of the advanced strategies that used to be available. There are some people out there that are still grandfathered in under the old rules. I'm sure some of you that are at or near retirement age might have paid attention when this was announced. At the end of 2015, they passed a new law. It came out of thin air, out of the blue, if you will. No one had really been talking about this, but it was passed as part of the budget at the end of 2015. They changed some very popular filing strategies for those, at full retirement age. So it used to be if you were to file and suspend your benefit and taking a delayed retirement credit, waiting to 70, if you filed and suspended, your spouse could still file for benefits and get the higher of their own or half of yours. The law changed that. So as of April 30th, 2016, file and suspend is no longer an option. They closed that, I don't want to say loophole, but they changed that filing strategy. If you did not file and suspend before April 30th of 2016, it is no longer available. What they did allow, though, is for a grandfathering in for those that were born on 1/1 of 1954 or earlier, 1/1/54 or earlier, you could file restricted. And what filing restricted means is, let's say that your spouse has filed for benefits. You could file restricted at your full retirement age. So that was 66 for those folks that have that 1954 or earlier birth date. At full retirement age, you could actually do something called filing restricted. You would collect half of your spouse's benefit while earning your own delayed retirement credits. So let's give an example. If your spouse's benefit was $2,000 a month, you could file restricted, collect $1,000 a month off of them, and then from 66 to 70, you could earn a 32% increase in delayed retirement credits. So if your benefit was $2,000 a month as well, you could grow your $2,000 to $2,640 at age 70 and turn your own benefit on at that time. So we are now going to talk quickly about benefits for survivors. A widow can actually take their benefit as early as 60. So if your spouse has passed away, you don't need to wait to 62. You can take a benefit as early as 60. You can take a benefit based on your age at any time between the age of 60 and your full retirement age. Your benefit is reduced if you file at 60 though. So if you file at 60, you can get 71.5% of your spouse's benefit. If you wait to your full retirement age, you can get 100% of your spouse's benefit. And by filing restricted, they left that filing restricted in only for widows. So if you file for benefits on your spouse, so let's say they had a benefit of $2,000 a month, you could collect 100% of that at your full retirement age. You can delay your own and again get that 32% increase, which was $2,640 at age 70. All right, benefits for divorced spouses. So if you've been married for at least 10 years and your ex-spouse is at least 62 or older, you can qualify for a benefit off of that. So let's just go back to our hypothetical couple. One person worked, the other stayed home, did not have their own earnings record, and then they got divorced. If they were married for at least 10 years, the ex-spouse, the working spouse, if they're at least 62 years old, you can go and file on their benefit and get up to half. So that doesn't require the ex to file for benefits or not. They can't delay taking their benefit to spite their ex. So for those that are married at least 10 years, not remarried, you can claim off of an ex. And we had this question one time. You can actually have multiple exes that you could claim off of. So if you were married to, let's say, 2 people, each married for 10 years or more, you would be able to claim off the higher of those 2. All right, so it does happen. We've been asked and we have confirmed our the longest or the most I've heard is 3. So there was someone that unfortunately got married and divorced 3 different times, but each time it lasted at least 10 years. All right, Medicare. So regardless of retirement age, Medicare benefits are available at age 65. You're eligible on the first day of the month that you turn 65. If you are already receiving Social Security benefits in the month you turn 65, you are automatically enrolled in Medicare. You don't have a choice on that. And if you're not receiving Social Security benefits, you must enroll to receive Medicare benefits at that time. Rule of thumb is you should let them know, start that process 3 months before you turn 65. And there are 4 parts to Medicare. All right, so what do we have with Medicare? Okay, Part A, that's your hospital insurance. That's going to pay, the basic costs for hospitalization, hospice care, home health service. Part A is going to be premium free, but there can be copays and deductibles. Part B is the more used provision of Medicare. That's going to cover your physician services, most outpatient services. Long-term nursing and home care is not covered by Part B, and there is a premium for that. So with your Medicare Part B premium, that is taken automatically once you filed for Social Security benefits. That comes right out of your Social Security check. So if your benefits $2,000 a month and you've got your Medicare premiums, and I'll just use a 2019 number for most people. If you had income, married filing joint of under 170, your premium would have been about $135 a month. And that would have come right out of your $2,000 on your Social Security check. Medicare Part C, those are your Advantage plans, and that's something additional that you can purchase. Private fee-for-service plans, medical savings accounts may offer extra coverage for things such as vision, dental, health and wellness programs. And Part D is your prescription drug coverage, and that's a voluntary prescription drug coverage. Pay extra for that. So Medicare coverage decisions. So decision number 1, how do you want to get covered? There's 2 ways of going about it. You've got your original Medicare with Parts A, B, and D, or you can sign up for a Medicare Advantage plan. That's going to be Parts A, B, C, and usually have D involved with it. So that's the next decision. Do you want prescription drug coverage or not? And last but not least, you have to decide, do you want a Medigap policy that can cover you supplementally if you go over on your healthcare spending? So that's a quick summary of Social Security and Medicare. We did allow time for questions here. I've been told by Jen that the audio is not working. So
Hi, Dave. Can you hear me now?
I can hear you now.
Oh, wow. That's awesome. Well, I wanted to actually welcome everyone to the webinar initially. And when we started, we had some nice I-4 banging in the background in downtown Orlando, which is nice. And we also had a train going by, and then the audio didn't work. So we were all very lucky. And wanted to introduce Dave. Dave is from Allianz Life Insurance Company, and he is our senior advanced marketing consultant. So he is definitely an expert of all things Social Security and Medicare. So we had a great expert on the line with us today who had to jump into the presentation with no real introduction. And I also have Brian Kent, our sales manager for our FAIRWINDS retirement planning with us today as well. And he's been fielding questions. So we have a couple of questions, and I'm going to turn that over to Brian to ask the questions. So Brian.
Good afternoon, everyone, and thank you for joining us today. We really appreciate everyone staying on through the entirety of this, even though we had the technical difficulties in the beginning. The first question is as follows. If I turn 70 on January the 27th, 2001 to get maximum benefits as soon as eligible, when do you apply?
Yeah, you can let Social Security, it's just like Medicare, you can let them know up to 3 months in advance that you want to wait until you're 70 to get that full 32% increase in delayed retirement credits.
All right. The next question is, what happens if you are past 65 and didn't sign up for Medicare?
Okay, great question. And it's a it depends answer. So let's say you're working, you have access to health insurance through your work, and you don't want to sign up for Medicare. You can do that. Check with your HR employer and see what they say. Some employers do require you to sign up at 65, and then they'll take on any costs that go over your Medicare coverage. Some employers don't require you to sign up for Medicare and let you stay on. If you don't sign up, there starts to be a penalty on not enrolling. That's if you don't sign up and you don't have access to healthcare through your work or your spouse's work. So there is a cost at waiting. If you have qualified coverage through work and you wait to enroll in Medicare, there is no additional charge for that. They let you work through your employer. There's no penalty for waiting to enroll in Medicare in that case.
All right, perfect. The next question that we have asks, if you do not sign up for Part D, are you penalized?
Yes. So if you're not working, not having access to healthcare, there is a penalty for waiting. So the penalty is 10% for each full 12 months that you could have been, but were not enrolled in Part B.
All right. The next question that we have states, if I turn 66 and 6 months while I'm working until I am 68, when is the best time to apply for Social Security benefits and Medicare?
That's a loaded question. So it all comes down to how long you expect to live and do you have access to enough funds to wait to apply for Social Security. I totally understand there are those that do not have the means, the retirement savings to wait until 70. Oftentimes, it's not a decision that's you get to make, it's made for you. We've talked to many people that their profession, let's say they're carpenters or in a physically demanding job, and they just cannot work past age 62. So it comes down to, do you have the means to wait, and how long do you expect to live? So again, Social Security is actuarially weighted. Whether you start at 62 or you wait till 70, you're going to get about the same amount of total benefits by age 82, 83. It's designed to not, quote unquote, penalize you for filing early or waiting if you have an average life expectancy. It's those that have good health in their family history, that taking care of themselves. If you think they're going to live into your late 80s or beyond, if you can afford to wait, that's generally going to be the best choice.
All right, great. Our next question may be a loaded one as well. It states, my ex-husband began his Social Security at age 62. I want to begin mine at age 66. Am I going to be able to receive half of his benefits as he is receiving them now, or as if he was 66?
Good question. So the ex is getting a reduced amount of benefits for filing early. If you wait until your full retirement age because you made the decision to wait, you are not penalized for filing early. So yes, you would get a full half of his FRA benefit, not half of his reduced 62 benefit.
Excellent, thank you. I believe this was a follow-up from an earlier question. And the question says, so my benefits will be larger each month if I wait until 70?
Yes, that's a monthly delayed retirement amount.
All right, thank you. Next question states, I've just turned 64 and collecting early Social Security. My husband is 62 and still working and providing insurance. Do I have to pay for Medicare for us both?
No, you can qualify through your spouse and delay enrolling in Medicare without penalty.
All right. And I believe the last thing that we have is we've had a request to review the benefit basics again. You had a benefit basics slide. And if you could just briefly review that, and I believe we don't have any questions after that.
Let me go here. Let's see. Are you talking Medicare benefits or Social Security benefits?
The question did not specify, but I believe it was Social Security benefits.
I'm making an assumption here if it was on how the benefits are calculated.
Dave, the person that asked the question just said it was in the first section.
I'm on the Social Security is more than just retirement, where it breaks down between retired people, disabled people, and survivors that are taking a benefit. Was that? Or the source of income? But the basic benefits of Social Security, I'm just going to try and address what I think is the question. Your benefits, the earliest you can take them is at 62 on your own benefit. If you're a widow, it's eligible as early as 60. You do have access to a spouse's work record or an ex if you were married for 10 or more years. You also have the ability, if you're disabled and meet that definition that you cannot work, and it's expected to last a certain amount of time, you can get a disability benefit through Social Security as well. Also, if you have minor children that you're caring for, so let's say husband and wife, husband dies in a car accident, she could actually get a widow's benefit and get a benefit for the minor children as well. The children would each get a check as well because of the untimely death.
Great. All right. Our next question states, I was married many years ago for over 10 years, but he did remarry. Do I qualify for his benefits?
Yes. Remarriage by the ex does not affect you. So as long as you were married for more than 10 years, not remarried yourself, you would be able to, at full retirement age, get half of his FRA benefit as long as he's filed or just turned 62 years old. There's no reduction if that new person in his marriage gets a benefit off of him. It does not affect you in any way.
Okay, perfect. Next question. I turned 65 in November. I work full-time and have full insurance benefits. What do I need to ask my Human Resources Department about Medicare? By the way, we have a lot of questions coming in.
Okay. Just ask HR if they require you to enroll in Medicare when you're eligible. I'm guessing they don't. They probably would have been proactive and notified them about that. I can tell you here at Allianz, we don't require it. Our coverage comes first. If you want to enroll in Medicare, that could potentially cover any cost above and beyond what our plan here at work would take care of. So I'm guessing they don't have to because they first heard of this from me. But I would reach out to them and say, hey, do I need to enroll in Medicare or am I good?
Okay. Our next question says, can a divorcee claim her own Social Security and a half of the ex's Social Security?
No. You get the higher of your own or half of your ex's, not both.
All right. Next one. I understand that my wife can file for half of my benefits when I file, born in 1951, and then take her full benefits at 70, which would be more. Is it best to go to the Social Security office or can you do this online?
I would say to go into the office and work with the manager on this. I have heard differing answers from some people that work in Social Security. There was some confusion where people ask about this strategy. They're told they're not having it available. So if you're savvy enough and you want to do it online, you can. But if there's any pushback or any questions, go into the office and do it there. And then if told you're not able to do that strategy, talk to a manager, because not everyone at Social Security is 100% on how it works in some of these cases, unfortunately.
Okay. I believe that was the last question that we had. Jennifer, do you want to wrap us up here?
Yes, if there were more questions, you can continue to ask questions. We'll respond to them afterwards. We'll email you questions or answers to your questions if you're continuing to send those. We may have missed some questions. I do see that there are more questions, like I said. And I want to thank Dave today for actually giving us a great webinar. And,
oh, you are most welcome, Jennifer. Thank you.
That was very interesting. I really enjoyed that, and thank everyone for attending. And just want to remind you guys that we will be sending out a replay of this webinar within 24 to 48 hours. It does take a little bit of time for it to process through the system, and we will send it out to you via email. And it will come either from our PR at fairwinds.org, or it may come directly from me. In the meantime, if you have questions, my email is jbecker, BECKER, at fairwinds.org. You can email me directly. And thank you again so much for coming and attending this webinar. Thank you again.